Meanwhile, you're seeing breaking news on the channel. Bajaj Auto numbers are out. I'm seeing a net profit number of 1,120 crore rupees. The stock currently is up in trade about 1.5%. That's where we're seeing it right now. The auto pack, mind you, as a whole, has been doing reasonably well for itself. And obviously, we will need a perspective on the kind of numbers being reported by Bajaj Auto, for which Mayuresh Joshi is joining us. He's fund manager at Angel Broking. Great to have you with us as well, Mayuresh. How are you doing? And happy Dhanteras to you. We're looking at Bajaj Auto's numbers. Is this looking good to you?
So afternoon, Vikram. Happy Dhanteras and Diwali to you, Fatima, Abha, the entire team at Bloomberg and all the viewers of Bloomberg. Specifically on Bajaj Auto's numbers, I see the bottom line at this point of time. The bottom line is much better than what we had estimated at our end. So if you exclude any exceptionals, which I don't believe would be there on the balance sheet except the Forex one-offs occurring for this quarter, my own sense is that looking at the bottom line itself, I think the margins should be anywhere between 20.5 to 21%, which would be quite reasonable. The top line growth looks very much in line. So I think one really needs to understand whether it was the operating leverage that played a part on Bajaj Auto, because the volumes were always expected to be 2% lower on a YOY basis, 4% higher on a quarter-on-quarter basis. So I think the management commentary will be key, specifically in terms of their export markets, what happens with the Nigerian markets particularly. And again, I think the product mix, three-wheelers were supposed to contribute reasonably better, both in terms of realizations and margins. Whether that has happened, I think one really needs to read into the management commentary.
Watching out for from the management as well. Sanjeev Bhasin is also joining us from India Infoline with his take on Bajaj Auto's numbers. Greetings of the season, Sanjeev. Bajaj Auto numbers, their PAT coming in at 1,120 crore rupees. Is it pretty much in line with what you were expecting?
Yeah, happy Diwali to you and your team and all your viewers. And yes, Bajaj Auto has actually greeted the Diwali, made the Diwali special very good numbers. There was apprehension that the quarterly numbers and the margins might come under pressure, but this is a beat. I think almost 100 crore more than what we had at 1,020. And we think, given the environment of exports improving and not much dependence on Nigeria and a host of other countries, the guidance should be the key for going forward. But if I recollect from what Rajiv Bajaj had said, I think they're going to come out with a stellar, bigger, newer version of a couple of models which will take on to Eicher Motors, and that should be the key to hear from what the management sounds on that.
Sanjeev, we're looking at a very competitive space and of course these strong numbers that have come out of a Bajaj Auto, but really if one was to look as an investor into what could be really working for this particular company, what would you amount that to?
Well, there are two things. One, I think they are the most well-efficient and cost-efficient management which you have. Plus the focus ahead, like we said, I think he's going to delve into the models which are going to take on the Bullet and the Enfield larger selling models, which is where the real icing is, and we need to hear more on that. But definitely, it is I would say arguably the lowest cost manufacturer, with cost controls being the key, and definitely I think the impetus on the export front, which should start to show a better kicker from 2017.
Sanjeev, I just wanted to ask you about your take on the auto pack here, because you seem very upbeat on the Bajaj Auto numbers. Where does it fall in your pecking order in the auto sector?
So slightly longer term, we are not saying the next few quarters. We still think that Eicher Motors can outperform, but we think that given the reach which Rajiv Bajaj has, I've been in an interaction some time back, I think they are headed for March 2017. Bajaj Auto would be our top pick on the count that the global environment would slightly get better. Their regional sales, in the sub-Asian levels with Sri Lanka and other markets also picking up, and we definitely think the new models rollout should be the added kicker for the icing on the cake, which can take this stock to almost 3,200, we think, by March 2017.
And very quickly, before I bring in Hiral, who's going to take us through the technical aspects of those numbers, Mayuresh, do you want to come in on the target that Sanjeev just mentioned?
No, again, I think remain optimistic on the two-wheeler space as a whole. What you've probably seen is push through happening, festive seasons around the corner. So the volume pickup on the domestic side is something that is definitely known to be a good trend. However, I think the differentiation has to be made because Bajaj Auto has a huge component of export revenues as well. And that again had created significant headwinds in terms of exposure as well as volume growth not picking up as per the estimates of the management. On the other hand, I think the domestic oriented two-wheelers, I think they've shown exemplary performance in the quarter gone by. The management commentary has been extremely strong, and though I think people are expecting new variants to come through, new platforms to come through, I think it is the volume growth aspect which can still play a significant role in terms of re-rating of these stocks. All these stocks have moved up significantly, so in terms of earnings, they're already trading at fair valuations. So for a re-rating, I think the performance and volume growth should be consistently achieved over the next few quarters, and that is possible because of good monsoons and the 7-pay commission recommendations that you've seen. The penetration of two-wheelers is extremely high, so I think one really needs to make a difference between rural India and urban India. Rural India might still go for two-wheelers, semi-urban, urban areas might still go in for the four-wheelers. So I think two-wheelers selectively look good, four-wheelers selectively look good, and the differentiation has to be made purely on a bottom-up approach from this point of view.
All right, gentlemen, I'm going to ask you to hold on because we have Hiral, who's of course joining us with a very tight review of what exactly has been happening with Bajaj Auto. So Hiral, it's over to you to really take us through the earnings.
Thanks, Fatima. So we were expecting a slightly muted quarter. However, if you see in terms of the total income, that has come in at 6,430 crores versus an expectation of 6,080 crores. And if you do the total income excluding the excise duty, that has come in at 6,054 crores versus the 6,079 crores. So in terms of the top line as well, it's a clear beat. If you see in terms of where profitability is concerned, the expectation was around 1,005 crores. However, that number has come in at 1,122 crores. And the beat in terms of where profitability is concerned is they've got a boost on the back of a higher other income, which has come in at 340 crores versus a 270 crores in the previous quarter. So clearly an other income which is higher by close to around another 70 crores, and that's the major reason why we've seen a major boost in terms of profitability. Margins, if you go to see, that number has come in at close to 21.4% as per what the release is stating versus a 21.6%. So yes, they have been able to expand margins as well to from 21.2% to a 22.3%. And in terms of where segments are concerned, overall the volume growth has gone down by around 2%, but this is mainly on the back of the pressure that Bajaj Auto has been facing in the export markets. If you see in terms of where motorcycle exports are concerned, they are down by around 27%, CV exports down by around 30%, as well as overall a 27% degrowth. That's what we are witnessing in terms of where exports are concerned. However, this kind of degrowth has been somewhere taken care of by the growth that they've been witnessing in the domestic markets. Because if you see the motorcycle domestic sales, we've seen a growth of almost 23% that has come in there. CV domestic growth around 11%. So the overall domestic market growth stands at close to 22%, which is somewhere offsetting the 27% degrowth that they have been witnessing in terms of where the African as well as the other export markets are concerned. So overall, if you go to see, the numbers have clearly beat street estimates currently in terms of the top line, bottom line, as well as where margins are concerned. And one thing that we will need to watch out for currently is how realizations have panned out, because we were expecting a growth to the tune of almost 1%. So again, that number is expected to be higher in this quarter. And in terms of a raw material cost is concerned, as well as staff expense, we were expecting a upward momentum to the tune of almost 50 to 70 basis points. However, that has been slightly lower than what we had expected, on the back of which we are seeing a margin boost as well. However, now we will wait and watch what the management has to say in terms of how the demand picture is looking like in terms of our export markets are concerned. And they have clearly given out a export market guidance as well. So whether they will still continue with that guidance or whether they will be looking to lower the guidance in terms of our export markets are concerned, And additionally, what's the kind of ramp up that we can expect in terms of our Avenger as well as V15 is concerned? And when are they looking to launch RE60 as well in the export markets? So these will be key things that we will be watching out for from the management. And additionally, you know, the Nigerian market, as we know, sharp currency depreciation has been affecting the Nigerian market as well. So what's the kind of impact that they have taken in this quarter will be crucial to watch out for from the management commentary. However, on an overall basis, the numbers have clearly beat street estimates and a spectacular set of numbers. In fact, the entire two-wheeler space so far, from Hero Moto to Bajaj Auto right now, as well as TVS Motors, has been so far spectacular. And now we will wait and watch for Eicher Motors as well.
That's true. The auto pack has kind of weathered a storm. It's come out of it, and we're seeing that kind of euphoria build up around the auto sector stocks. Bajaj Auto, of course, leading the pack over there. Sanjeev, you were talking about this as well. But just to take away from one of the points that Hiral was mentioning, which is about the profitability, I'm just wondering whether this can be sustained, because at least in this quarter, we are seeing that kicker come in by way of a higher other income. Do you think this level of profitability, considering the kind of demand that exists abroad, whether you talk about Africa, Nigeria, for them this is important? Looking ahead now, do you think these levels of profitability can be expected in quarters ahead?
Well, you know, I think 20% was the flat which you expected the EBITDA to do. I think they've done a beat. They've run 21.5.
Yes.
So that could be more to do with management efficiency, some of the cost controls. But yes, the spot of bother is definitely the exports. However, at 25, 50, 26 that was being priced in, and it's a stellar performance on the local front. We think going into 2017, you could see a renewed emphasis on exports, with the, you know, some of the cross-currency headwinds also trying to taper off. And I think it could deliver stellar numbers. The management commentary will be more keen, but from what I last had an interaction with Rajiv Bajaj, they are going to be one of the better performing two-wheeler stocks in 2017. So we have a buy rating on any decline for Bajaj Auto.
All right, Sanjeev Bhasin joining us there, telling us that they have a buy rating on any decline on Bajaj Auto, and also really expressing confidence with the company. Thank you for having come to us on the show, Mr. Bhasin. Just coming back to Mayuresh, I just want a quick check from you in terms of how you've been reading the markets. We've, of course, all been looking at earnings so far as one of the key triggers for sentiment. But Mayuresh, what are you making out of the markets at this stage?
Again, largely, Fatima, I think the earnings were expected to be a little soft this time round, and though you've seen pockets of good earnings come through, corporate-facing banks are seeing stress on their balance sheet, and that this quarter, in fact, even for the next quarter, that stress might very well continue, with provisioning and the slippages from the watch list taking precedence over anything else on their balance sheets. Secondly, I think the IT sector as a whole has largely underperformed. You've seen a guidance cut come down from Wipro. You've probably seen guidance taper down from Infosys. To a certain extent, I think HCL Tech and Tech Mahindra, with the growth that they've shown in dollar terms, have been something of an offshoot for the mid-large cap IT names. Specific mid-cap IT companies did perform better. Cement has done reasonably okay. I think Ultratech posted good set of numbers. ACC largely disappointed in terms of their EBITDA performance as well as realizations. So largely it's been a mixed bag. I think it's the way that we're seeing that it would be a mixed bag for the remainder of these earnings season as well. PSU banks might report reasonable numbers in terms of asset quality remaining stable. And secondly, I think the non-interest component being exceptionally high because of the trading gains that they'll probably witness on the GSEC portfolio. But again, capital goods expected to be a little softer.
We have a little bit of an issue connecting with Mayuresh right now. As soon as it's sorted out, I want to ask Mayuresh also about the infrastructure space and if we're going to see a major bump up over there going ahead from here. But of course, it's the last trading session for Samvat 2072. Piyush, my colleague, is here from our research team with the recommendations that are coming in from top brokerages on the kind of stocks that one should be betting on in the new year. Piyush, what are they saying to us in terms of the traction that we are seeing right now? What's likely to kick in going ahead as well? What are brokerages making of the markets?
Well, there are many stocks which the brokerages are bullish on. Let's start with what Kotak Securities is saying. Now, Kotak says that expect returns in the Samvat 2073 to be better than the last year.